Welcome to Daily Fortune, where we talk about the latest topic about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so that you'll know when I upload new videos. Now, let's get started. Real estate nowadays has been the go-to business and investments of a lot of people. Even big companies allocate funds for real estate investment. You take a look at financial positions that are open to the public, and you'll see long-term assets which can be categorized to land and building, real estate. It is no wonder that anyone would want to invest in real estate. It is for the very main reason that lands and buildings don't depreciate. Instead, their value increases over time. If you have money sleeping in the corner of your house, who wouldn't want to invest in real estate? As your money in the bank can earn interest for as high as 1% annually, your money could actually go further if you invest in real estate. But as this can benefit the whole economy, this is not always the case. China's real estate market has been called the world's most important sector in the world economy. It has become twice the size of its US equivalent and 4 times larger than its own GDP. Its real estate, not including housing construction and some residential consumption, accounted for 7% of its GDP. No surprise this has taken over a big portion of China's growth for the past 20 years. But this was seen as a bubble by Cathie Wood, CEO of ARK Invest, as Japan had also gone through the same real estate bubble in the early 90s, where they experienced a tremendous economic disaster through those times. This video will be your ground as to why the most important sector in the world economy can also become China's biggest silent killer. As the population of China has grown to 1.44 billion, you can just imagine how good it would be to invest in a real estate business with a population that large. And as a lot of them have thought, it has really become a gateway for a bigger income. As the demand increases for people to live in the heart of cities, it has pushed the developers to increase the price to pay to be able to live in them. With this, it has led many more developers in the places outside the heart of cities to grow more and more for people who could only afford a much cheaper shelter. What a few of them may have not expected is the long-term effect this wave-like action may have already caused. Buildings that are left to decay as settlers go for a different territory, as for one reason, the pricey accommodation, have become the very problem as to why real estate could also strike down the entire country. As investments, in their very nature, would always include a percent of debt, developers would have to garner enough for the cost of the entire development, including interest and non-operating expenses. A highly priced lodging would just be appropriate to turn the table around in the financial aspect. But the non-consideration of the ability of settlers to occupy such space, and I'm talking about the price, would just result in a fall as the demand would abruptly decrease. Are you enjoying this video so far? If yes, don't forget to like the video, hit that subscribe button and notification bell. Now let's get back to the video. This is what happened to the world's largest ghost city, Ordos, China. Ordos was developed to house millions of people, as it is located as one of the main cities of Inner Mongolia. But mid-construction, it was shut down as interest and dues weren't paid on time, investors pulled out their investments, which caused debts to just increase and double over time. This has caused for the place to have rooms that weren't even completed, causing the prices to increase as the cost is divided to a lesser number of occupants. This has built doubts to the remaining occupants as well, leaving entire streets of unfinished buildings and unoccupied homes. In a country as big as China, it is understandable that there are many more cities that have a high demand for their occupants in case of housing payments. This would stir more and more people to meet the demands of living in such a place that taking up loans and living a lifetime of debt is not even one to think about, but is the only option. As the monetary measure of the market value of all the final goods increases, developers and real estate investors are quick to decide they are ready to dive and take advantage of this growth, causing developers to be stuck in debt as demands weren't met. Evergrande is top-notch in real estate development. It has expanded so much in its developments, it has become one of the largest developers in the world. And as one could always think, debts always have a big part in a company's success. But even something as big as Evergrande is still dependent on the chain of demand. What are the houses for without its inhabitants? They could no longer stop the investors from doubting, as problems in the company had leaked. They are already struggling to convert their bonds to cash to pay their creditors. And as the rapid decrease of real estate took toll in the country of China, Evergrande has diversified into other sectors, such as electric vehicles, football, and even bottled water, as they almost have no capital inflow according to the Evergrande founder, Xu Jiayin. If a world-recognized developer is affected by such disruption, imagine what it's like to those who just thrived to join what they thought was still a trend, without taking into consideration the demand that should meet all the developments going on in the whole country. As China's real estate crisis showed no signs of letting this tremendous battle go, other developers have also been struggling to stay afloat. Fantasia, a luxury apartment development, is also on the brink as this Shenzhen-based company failed to pay $350 million owed to lenders by the month of October 2021. Cynic Holdings is also among the companies that are hanging by a thread caused by such a crisis. Cynic Holdings has been rated by Fitch, a ratings agency, to C, just a level higher than restricted default, which defines a company that has failed to pay but has not yet begun any formal process of filing for bankruptcy or liquidation. Unlike Evergrande, whose financial struggle is yet controllable, Cynic is one to make a list of those who suffered the most by the decline of the real estate business on the board. It is down for nearly 9% in its business for the year 2021. The latest to join the group to miss debt payments is the Beijing-based developer, Modern Land, failing to pay neither principal nor the interest due October. These are just among the top 4 who suffered the most in this industry. Yes, there are still a lot more who are suffering from this ongoing crisis. And so it is safe to say, now is not the best time to consider real estate in China if you don't want to add to this list. Now, as people see GDP as a sign of economic strength, what good will it do if it is built on growing unpaid debts? Imagine how China has managed to outgrow its own records day by day by engaging into developments and contracting in more and more debts. What an unhealthy imbalance this would make when its debt-to-asset ratio is no longer proportional. The excessive increase in prices and borrowings have caused China to add more agencies in the property sector to control the address problem. In 2020, the government imposed the 3 red lines on certain developers to help curb debt levels, forcing them to deleverage. 3 red line policies require first, 70% ceiling on liabilities to assets, excluding advanced proceeds from projects sold on contract. Second, 100% cap on net debt to equity. Third, cash to short-term borrowing ratio of at least 1. This is to drive the credit ratings for developers and open up opportunities for bond investors. But as Cathie Wood would say it, this could have been effective if implemented a few years back. Right now, the most reasonable thing to do is to sell off assets to balance the debt ratio, which is what the developers are doing right now. The problem with this common solution is that the real estate crisis has not affected only a small portion of its country or 2 to 3 cities. It is a dilemma that has affected the whole country, and so even with the effort of Evergrande to sell its assets at a very competitive price, it is miraculously difficult since the potential buyers are also up in their game of selling their assets to pay off debt as well. To know how rapid the increase in economic value of China has been, it would be too hard to realize this is a serious problem that may cause the collapse of China. But it is a problem not too impossible given the nature of economics. You can never be too sure what struggles a country is actually facing behind the effort of raising one. Just like what is happening in China, rapid changes around the world could also have an effect on the global economy. What's sad is, you can only find it out when the problem has already grown to become a candidate for a nation's threat. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, please don't forget to hit the notification bell. See you next time!